Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look at how to trade flag patterns. Now, flag pattern is another one of those very common type of patterns that a lot of traders will generally look at. But flags come in a lot of different formations. Now, the reason it's called a flag in the first place is because, well, it looks like a flag. When we're looking at it, we have a move up or down, and price stalls out, and it ends up looking like a small little channel, and it creates what you could visualize as a flag. And that's kind of the view that, the view of it, and the reason behind the name is because, well, it just looks like a flag. Now, when it comes to a flag pattern, there are a lot of different ways to potentially trade this. So let's zoom this out again and take a look at the overall movement. So we have price moving around, we get a strong rally to the upside, and it starts pulling back a little bit into this type of formation. If we look at the overall structure, we can see that this is a flag pattern, and it fits really nicely. Now, what are we looking for? There's a couple different ways to approach this type of trade. The first one is taking the actual breakout, right? Waiting for the market to break out above the highs, whether it's a candle close or a break above a swing high. Any of those will be viable areas of entry because buyers will be buying in and looking for the anticipation of a continuation move up. That's one way to approach it. Now, that is a very aggressive way because you're getting in as early as possible. You're buying right when the breakout is happening, and you're taking a little bit of a gamble. The probability isn't super high that it's going to continue, so there are other conservative, well, more conservative ways to get into the trade. The next conservative option would be looking for something like this, where the breakout occurs, but you're not necessarily just looking for a breakout, you're looking to combine that with something else. Could be looking to combine that with a divergence at the bottom. You could be looking to combine that with a breakout above a prior level of support or resistance, like we have here, a double top. Breakout above that and then buying above there would be a slightly more conservative way. You're taking the exact same trade, but you're opting to get in a little bit later in a form of payment for getting more information, right? So that's kind of the other approach to it. Now, of course, you could also look very similarly to most other patterns, a breakout and then a pullback, right? Wait for the market to pull back to retest the flag and then bounce back up. Now, all of those are still looking for the same objective. The primary objective is getting back to the high of the flag point. After that has been achieved, then that's when things start getting even more interesting, because you could be looking for a situation where you measure the flag pull, right, this kind of extended move up, and you look for a deviation move up from there, right? So if this equals 100%, then you're looking for 100% more above those highs. You could also use a Fibonacci or retracement where you're looking for a move up, the pullback, and continuation from there. So there are a lot of different ways to look at it. Now, again, this is where things get a little bit interesting because a flag isn't necessarily always created equal. A lot of traders will consider flags to be a lot of different things. This is a structural flag, what we see here, but sometimes a flag could be as little as a one candle pullback. Depends on how aggressive you want to be. Now, if we look at a chart and an actual example of what a flag looks like, here we have Harley-Davidson on a daily chart. We could be looking for a couple different things here. Now, a flag pattern, again, could show up in a lot of different forms, and the ideal situation is that it's a continuation type of pattern. So what we're looking for here is any type of strong aggressive move. Did you happen to see one show up anywhere? Yeah, you probably see this one standing out pretty obviously. Big, strong move to the upside. That could potentially be a flag. Now, if we look at the move itself and we zoom in a little bit closer, we can see that we have a strong move up. That's your flag, and here is that's your flag pull rather, and here is your flag. And see how the market kind of broke out, made to a new high. Again, the primary objective, at least the initial objective, is back to the highs. That was achieved. You're then looking for a follow-up objective to measure this move up, right? So you have the move up, the pullback, and potential continuation higher, which that does look like it was achieved as well. So there's a lot of different ways to approach this, but you could also structure this in a slightly different way. Like we talked about, there's a lot of ways to trade a flag. You have the move up, you have the flag pattern forming inside of here. The breakout point would be right there as it broke above. We could combine this with other factors, other levels of interest, whether it's a swing high breakout, a divergence play. I don't think there's a divergence play here, at least not in the daily chart. But we have a swing high breakout right there, and that allowed for continuation up. Now, in this case, you're buying a breakout pretty much right at the initial objective, so it's not the best thing in the world, but you are anticipating that it's going to be a continuation pattern, meaning that it's likely to go a lot further. A couple other options. We have a breakout pullback. right? Nice breakout, pulls back to it. You can see the market holding that support, and then it starts tearing back away. It even came back to retest it again over here. So lots of different ways to kind of handle this sort of move in terms of the overall kind of formation or structure, if you will, of the trade. But they all come back to the general consensus of it being a continuation pattern. So what are we looking for? Again, if we measure this up, we have the move up, we have the small little flag pattern, and we have continuation higher. So let's measure this up and see how this fits. We'll just use a box to make life easier here. So this is the overall move higher. So if we take this move higher and we transpose this box on the highs, this is the most aggressive, farthest out target. That one you can see was not achieved. That was all the way up at 65.32, and the market came close. I mean, it made an attempt here, pulled all the way back and made another attempt and just could not get the job done. So using the deviation method, meaning 100% equals 100%, that is the most aggressive approach and the lowest probability because the target is so far out. So if we want to increase the probability a bit, what is one thing that we've talked about quite frequently in a lot of these tutorials? Utilizing Fibonacci ratios within that deviation. So what's a common deviation? Well, 50 to 61.8%. And guess what? If we eyeball it, 50% is right about there, which means 61.8% is right about there. And guess where all of the resistance started coming in? So a nice deviation play with Fibonacci ratios. That increases the probability of success on the trade. Now we can also utilize the Fibonacci ratios themselves and look for somewhat of a kind of a measured move, if you will. So let's look from here all the way up to the highs. And then we have the pullback mode right there. And there you can see the 50 and 61.8 levels. So we were actually pretty close. I drew those up pretty darn close to where they were supposed to be. But we can take the same box. This is the measurement of this initial spike higher. And instead of putting it all the way up on the highs for a deviation, we're going to put it on the pullback. And here we can see a little bit of a different scenario. Notice where it went up to, and notice where all the resistance came in. A lot of traders utilize that move up. They measured the pullback. It never broke down really aggressively. It did challenge those lows. It opened with a gap outside of it. I believe that was on some tariff news. But then when it popped back up in, it went back up, and it met that objective at the highs. And it's very interesting to see, once that objective was met, completely fell apart, right? Everybody who was buying that flag pattern, although it might not be the easiest thing in the world to see, looks like everybody was taking profit. Now, it does also line up with some major swing highs, etc. So there are some other things there, but it's very interesting to see that kind of response off of such a small little pattern. It doesn't really stand out very much. Now, these can happen really tiny like we have here, or they can happen a little bit more extended. Right, you could have a relatively shallow angle to a flag, and this could be the whole flagpole, right? I mean, that whole thing could be one big flag to the downside. Same thing, breakout move is the most aggressive. Adding a little bit of probability for a breakdown of structured support would be right there. This one, again, gapped down on tariff news, but you get the idea. So overall, just kind of to recap a flag pattern, it is a continuation pattern. It can happen really, really wide, or it could be as little as one candle on a strong breakout. Either way, it's the assumption that the market will continue doing what it's been doing based on the market's inertia, and it keeps pushing, and that's the idea behind it. So that's going to be the flag pattern. Lots of different ways, as always, with many other patterns to trade, and generally taking the most conservative approach usually will yield the highest probability, or at least the highest accuracy on the trade. But that's going to do it for this one. As always, if you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Don't forget, underneath the video, click on the subscribe button and the notification bell icon to the right, left, whichever way the camera's pointing, of that button, so you'll be notified every time these videos go live. Outside of that, though, enjoy the rest of the day. Hopefully you had an awesome trading day, and we will see you in the next one.